Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Amir with the Bulletin Board Heroes here on Share Talk on Monday, the 10th of February. Starting off with Brave Bison Group, and I've seen this many times before. You have that falling wedge, you have a gap through the 50-day moving average, and then this stock then hits the top of a broadening triangle. In this case, it's up at 1.8 pence. For Brave Bison, at least while we're above the 1.15 to 1.2 pence area, we regard this as being a breakout for the shares, even though we pulled back from the best levels. Bit of bullish divergence there as well in the RSI window versus the lower lows of post-January period. And the gap higher, obviously, hopefully will remain unfilled ahead of the move to the upside there over the next month or so. On to Biotrol, which I've covered before, but obviously we are in a coronavirus type of situation at the moment, looking for plays that might do well out of this crisis that we have. Got the stock in a bullish triangle here. Hasn't actually broken the top of the triangle. That's around the 2.35 pence level. But a February triangle there to break, and then the target then would be a move towards the top of a rising trend channel from July, heading for 2.8 pence, and obviously we're looking for much more than that, at least retesting early 2019 resistance after that. A stop loss on the situation back below the 200-day moving average, currently at 2.02 pence. Nice to cheer us up with the latest daily chart of Katora Gold. Here you can see how the shares had quite a sharp retracement. Well, I suppose it's 50% retracement from that late January peak, so around the 1.7, 1.8 pence was the base. What would be fantastic today would be an end-of-day close above last month's high, which would be a very bullish statement indeed. Technically, that was 3.2 pence, but really anything above 3 pence, probably the shares are heading higher for a new leg to the upside. That was a move consolidation, that pullback. And looking in terms of what could be the upside here, best case scenario probably over the next few weeks, or the way things are going in the next few days, but the next few weeks would be a top of 2017 price channel, a target as high as 6.5 pence. That is its resistance line there, heading towards that zone, and looking pretty sturdy indeed. Former resistance there in May is the reason why I've come up with the May 2018 rather is the reason I've come up with the new support likely to come in at 3 pence or above. On to stock, which was, as I keep saying, was called up I think only a week or two ago at 16 pence. Novocyte up to 70 pence now. It's threatening to be the first 10 bagger of the year, or at least it was a multi-bagger already, but 10 bagger of the year is possible given the way things are going. We have the shares at 70 pence, which was the previous highest target on offer. Got that resistance line projection there from 2017 heading for £1, which now doesn't look quite as ridiculous as it did before. And that target very much valid while we hold above the initial February resistance, which was 58 pence on an end-of-day close basis. Interestingly, the RSI at 84 is not quite as extreme overboard as you might expect, given where the shares are. So a little bit of gas in the tank. RSI could go back into the 90s, and that could be the source of the next leg to the upside. Less dramatic, but hopefully in some days could be just as dramatic, is Ormond Mining. One of the aspects of this Bulletin Board Heroes sweep is looking for new situations as well, not just the momentum ones that something like Novocyte's become. Broken this resistance line from early January, and really on that basis one would be happy to look for at least a retest of the intraday highs there at 0.89 after the fall that we had at the beginning of January, and hopefully much more. RSI bullish divergence there as well, and the upside valid really while we hold above today's low on an end of day close basis, which is where the resistance line is at 0.65. One of the stocks which meant to cover before, but didn't quite make the grade just because there were other stocks which were even better, is Primoris. Here you can see how we broke that symmetrical triangle, quite a few weeks now ago, around the 2.65 pence level. Situation now is that we've got a nice breakout, and at least an end of day close above 3.2 pence should be enough to underline the prospect of further significant gains for the shares. And at least while we're above 3 pence, the overall target is a rather ambitious looking target of 7 pence, which is a 2016 resistance line projection, actually the top of a 4-year rising trend channel based around the 200-day line at the moment at 2.4 pence. So looks as though there's plenty to play for at Primoris at the moment. Another stock which got a little bit left behind was Power Metal Resources. Here we have a break of this resistance line there from the end of October. Also the break of the 50-day moving average. So while we're above that at 0.36 pence, looking for a move at least to the top of the post-July range for the shares at 0.6 pence. And given what a tight consolidation that was, the breakout now should start to accelerate now that the logjam has been cleared in the 0.3 to 0.38 area, really, for the shares. A little bit of bullish divergence coming in the RSI window just to make us feel more confident that a breakout will be on its way. Rather unhappy situation last year for Red Emperor, but looks as though it's back in business now. We've got this gap higher through the 50-day moving average, is one of our favorite signals, of course, hence the reason for the coverage today. And so really breaking that line there from January. The view now is that at least while we're above the 50-day moving average at 0.63 pence, we should head higher towards the top of a rising trend channel, probably towards the 1 to 1.1 pence area over the next month or so. Obviously there is some resistance towards the 0.9 area, but at the moment the top of that channel heading towards as high as 1.1 pence. Starvest, stock which has been rising vertically over the last couple of sessions. In fact, today a stronger session than Friday, given that we've opened on the low and currently on the high. Now it's just really a matter of working out how high the stock could head. The guess here is that we could hit the top of a rising trend channel from the beginning of 2017 up towards the 8 pence level. And that target value, while we hold above that old 2017 peak at 5 pence, so above 5 pence, looking for 8 pence and possibly much more. That is a very vertical line indeed, and no gap either, so really looking quite sturdy in the bargain. The last stock of the day is Tomco Energy, and here you can see that the stock has made a nice base over the last couple of months. We're looking at, and it's also actually recovered that gap, the top of that gap towards 1 pence. While we're above a penny, looking for at least a retest of that post-October resistance as high as 1.75 pence over the next few weeks. As far as the stop loss is concerned, as I said, just actually back below what was formerly support in October, November, and the gap at 1 pence would almost certainly do the trick ahead of further upside. That's it for me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.